Hi, Ms. Mute.
Hi, how are you?
I'm good, and you?
I'm very well, thank you.
All right. I just say I'll start it early so you all could test and whatnot.
Okay, good. Thanks.
You know something, we're not going to be able to be in the same room.
I have to put mine on mute.
Not only mute, you just have to take off the volume.
Okay. How would I do that? You want to test it with two of us here now and see what
Yeah,
happens?
so you see where you have the up on top. See where you have your take off your volume on the top?
Yes,
You have to-
ma'am.
Yeah, you have to take that off
Okay.
when plus mute. And I'll have to do the same when you're talking. What was that? You have to go? You have to take off the volume now, the three of us in here, because then you'll get it.
So if I do fin take off volume, and how would I put it back on?
Just undo it.
And you know.
You see where you
You
see,
saw
this
it.
is the X and you see you have the
One next. Okay, I see it. I see it.
use I think it's F4 I think. Yeah, so just F4 on and off.
Okay.
No, make sure I'm sure that's kind of something.
Ah, you. Yes, that's the thing. Let me try it. Hold on. You- How is it now? Still.
Yeah.
Let me turn off mine. Hold on.
No, what?
Okay, mine is off. You can off mine.
You see?
Okay.
Hold on, we've gotten to it. Let me get them young people in here. Did you hear? Yeah.
Yeah.
What do you send that email?
George, Christian. God, no, this is terrible.
Special.
Okay, talk now. It's still coming through.
Right. How we get this to be done again?
Somebody like speaking on if somebody's mic is open, then
Oh, I don't know what's
only one person has the mic and one person
Take it.
Hello?
So what happens when I'm talking now? At the
No, Akita supposed to
Well,
come and meet me for lunch.
She's presenting.
Alright.
I'm presenting.
Oh, well, depends.
We have a 1 o'clock
One of
meeting.
y'all can have speaker, but what y'all could do is rotate mics. So like when
Oh.
she's talking, she could go on hers.
Can we
and
do
when you're
that
talking,
at
you
2?
could think, but you could only hear through one of them.
Okay.
She leaving on Friday.
I think this is working now, is it?
Well, her
Alright,
mic is on.
okay.
Who's
Alright, I just took it out.
But your mic on.
Put my mic on.
Yeah.
Hello?
You know I'm on volume.
No, I took off the volume. Hello?
So keep on.
You're using the participants link, right? You give us individual links.
Yeah, I'm gonna probably give us we used, but he sent me a separate email on the phone.
Oh, he did?
He said, Maria, you're told, you're on mute.
No, she's on mute. You have zero volume on.
Right.
So whoever,
You heard me.
No, she don't have any volume anywhere.
All right, so we need to test it.
One person needs to have a volume, one needs to have a mic at a time.
Right, so
Hi, Miss
right now,
Daniel, I'm hearing you.
You can put on your volume as well.
right, and my volume
And
is
use
on.
yours as master volume, and mute when she wants to talk.
Okay,
How do I get on? Just go back into the volume thing.
Well, no, you would unmute it. And if you turn up your volume, you would.
So if I turn,
You told her on, we have a great volume.
Right, this is the Maria, I'm gonna send it to you now, right? He's like, okay.
okay. So what I see here is not, you guys know?
Well, I don't know what.
yes, she's done already, TMA secretary, yes. But she's spoken to her. No, I did not use a participant link. She said, this is the link for you. So you see, I'm still echoing.
Yeah, because if her volume comes out and your mic is still on. So what you might have to do is whoever's talking would have to talk and have their volume on the same time, but when they stop talking, take off their volume and the mic
Yeah,
so that the other person can do it.
right.
All right, so let's see. Same issue.
No, wait, hold on, what my volume is on.
Okay.
All right, try it now.
All right, that's better, but are they? But you don't have to come off.
Ask if she's hearing us properly.
There's a quick button to mute.
Hi, yes, I'm hearing you guys.
Yeah,
Sure. This one.
I'm off.
Which one?
Yeah, if you press Control and this button, it mutes quickly. And you can mute your mic quickly as well with Control and F.
Okay,
So
but
like-
why am I still echoing?
Because mine is,
Gina, you have to come off. You have to turn off your, right, let's try now. That's perfect.
right.
Okay, so that's working.
Well, we don't know.
Well, nobody's hearing me.
Well, we won't hear you because our volume's off, but everybody else should hear you.
Well,
Okay.
let's.
I'll see
find
TTMA.
Well,
out.
you are starting, you are doing your own first. Hi, I'm just testing. Let me know if you all can hear us. Well, hear me, I should say. We're trying to avoid the echo in the background.
Hi, Miss Mute. I could hear you clearly.
Put the way headsets. That was all.
Heaven knows where that is.
Hi, are you hearing me?
But she doesn't. Are you hearing us? She's not.
Maria's first, so I don't know. I'm not hearing anybody. I'm even hearing her at this point.
Let me find out if she's hearing us. Is she hearing us?
Well, I typed in a message, yes.
Oh, yes.
Hi, guys, I am hearing you.
Test each individually, or.
Okay, so Anna, you come off.
Right, hold on a minute.
Are you hearing me now?
I'm hearing you.
Okay, great. So we're good.
You good? So it's working.
Hi, are you hearing me as well?
Hi, Miss Matthew. I'm hearing you clearly. Hi, I'm hearing you.
You hearing me?
Yes,
Okay, great. Thank you very much.
sure. Hi, Ms. Matthews. So 81 persons were registered. So let's just give it to like 3 minutes again and we can begin.
Good morning, everyone, and welcome to TIC 2020. My name is Gina Matthew. I am an associate partner at Ernst & Young, and EY is certainly very, very grateful that we are able to share in part of this new year's experience of TIC 2020. And my role today is really to introduce our presenters, and we have an esteemed list of presenters today, and I want to start off with our first presenter, and that person is Maria Daniel. And Maria is a partner in our strategy and transaction services practice. She has over 20 years experience. Maria has advised clients in the development of growth strategies across various sectors. Her portfolio is extremely dynamic. It includes strategic advisory services, restructuring and receiverships, valuations, due diligences, mergers and acquisitions, and more recently, digital transformation strategy. She has led customer experience engagements for local and regional clients, and also provided clients with advice on raising debt and equity. Maria has, as I said, supported clients across various sectors, and she's particularly interested in developing entrepreneurs, and she has a passion for it, and she supports, in particular, local startups and SME entrepreneurs. And last but not least, she has been recently appointed chair of the Trinidad and Tobago FinTech Association. Our next presenter, Anna Mute. Anna is an associate partner with the EY Caribbean tax practice, and she brings more than 20 years of tax experience in providing tax services to domestic and international clients. She has extensive experience providing direct and indirect tax compliance and advisory services to multinationals and conglomerates operating in the Caribbean. Anna spent 4 years on the Caribbean tax desk in London, providing tax advisory to UK and European multinationals operating in the Caribbean. She also has extensive experience helping clients to manage tax policy and controversy issues and matters. Anna works with highly reputable domestic and foreign clients of the firm operating in manufacturing, retail, and telecommunications. So I would like to hand you over to our presenters today, and Maria Daniel, you can take the lead.
Good morning, everyone. We're just getting rid of the mute there. Thank you, Gina. So this morning, what we really want to do is look at things a little differently. So we've heard a lot about the pandemic. We've probably tired of hearing about COVID-19 and what we need to do, and the whole idea of reinventing, reshaping ourselves is really what we want to focus on this morning, but more on the how. So everybody's hearing a lot, I need to reinvent myself. I need to do things differently. We need to reshape. So a lot of buzzwords have been going on during COVID-19. And COVID-19 has really brought a lot of different things to our lives. It's not just work has changed, but work and life has changed. So we're gonna just set that stage of what we've been going through, what we mean by reinvent. And I'll go in that a little bit of a little exercise I actually did internally on what people think reinventing is. Jeans, you wanna go to the next slide? So at the end of the day, this is nothing new. Social distances, things are closed. We're trying to work from home. We're trying to manage kids. It's all just coming at us. And at the same time, in the business world, we're looking at, okay, if we just look at this whole digital transformation, everybody's telling us we need to go online. What does that mean? What is this going to cost? So really to survive all of this, and when we talk about this whole reshaping, I want people to think that this is not just about technology, right? This is looking at your business processes. This is looking at how I deliver my services. how are the demands of the consumer changing? How are preferences changing? So let's take a little bit of a look of what we think reinventing really means. And it's not just taking a shoe and changing the color. It's not just saying, well, okay, I now have to do delivery. So I could do exactly what I do with somebody dining in as delivering. So let's just go a little bit forward and talk about this reshaping. And we've put some examples, and I ran a little competition in my office, a challenge. So I try to do these things every so often with my young people. And, you know, the challenge was give me an example of what you think reshape, reinvent, and reimagine means. And this was actually given by Gina, this one, when she looked at it and she saw how people are taking the mask and putting it through the process to then end up with plastic, right? So it's a whole, you know, era now where we have to think of how are things are changing and how we're going to make this to our benefit. And when you think of the seaweed and the sargassum and Mother Nature, what we think is really a pain for our waters are actually a solution for plastic. So we have to think about how are we going to do things differently. We take in a mask and we get in a plastic bottle. So how are we going to change what we're accustomed doing to get something new? So in the competition, these are some of the entries that I got, and I picked out two that I thought really brought it home. So Greenage Farms, we actually had the pleasure of meeting this group through Planting Seeds and our Entrepreneur of the World program, and what they have done with bringing agriculture to the backyard, right? So two things I want to show here. They have taken their experience. They're both engineers. They were actually laid off from Petrotrin. And this is what I talk about when you have to look back within and don't just give up, right? You have to think about how can I reinvent myself? And they are two engineers and they came up with the idea of the verticals, right? The hydroponics, the whole system. They actually sell the whole system. They install it. And they've really taken something that people want to do, but didn't know how to do, didn't have the space to do. But the addition onto this too is if you think of, you looked at social media during COVID-19, everybody was baking, everybody was planting. So they also realized there is a greater demand for something like this. So they have now started a whole business where both of them can actually live off of it, and they're expanding. They are looking for land as well. And they are continuously improving this process as they go out there. So when we're talking about reshape, reinvent, and reimagine, this is just farming done in a different way. And the next great example we have, which you know, it was all over social media, is of course the doubles reconstruction. So when we were all missing our doubles and we looked at it, and you know, if you try to put a doubles exactly how you get it at the side of the road, you would have ended up with a very soggy, not good doubles. So what they did was how they delivered it was very different. So you put it together and you will get the benefit in your home like if you were standing at the side of the street. And why I think this is a great example is because there are a lot of food companies now and restaurants that's doing the delivery and packaging it the same way. And when it reaches to your house, you have a soggy hamburger. So the point being is you now have to step back and say, how is my delivery need to be different so that the customer experience is still very good? Because that is how the customer is going to decide who am I going to buy from after. So if you even think about the food drops and the apps that everybody's using to order food, people actually who have the better apps or the better delivery, the customers are going to pay for it because again, it's about customer experience. So in this period, it's not just about saying, okay, I'm going to do the same thing, but I'm just going to deliver it. How your people answer the phone is really important. because now the interaction with the customer is going to be more over the phone than in person. So it's about retraining your people to also reinvent themselves. But what we want to look at as well is how do we build these resilient businesses? So another word that comes up all the time, what is resilience? Resilience really means that in the ups and downs, I can survive in the down area. How do I relook my business with some fresh eyes? How do I look at what expenses, I need to focus on now because my business model needs to change? Am I going to hold a whole set of real estate anymore? I'm going to have excess resources. How can I collaborate with my peers, my competitors, so that we could, create volume? Because volumes are dropping, revenues are dropping. And you cannot maintain the same cost when your revenue is dropping. So you now have to think differently on how can I collaborate? How can I look at my overheads and bring this down so that when we have the down cycle, I can survive? What we don't know is how many waves we're going to have with COVID-19. So we have to prepare that this could go like this for a very long time. We have to look at these strategies of where we are targeting our business, because there are a lot of different segments of the market that you would not have been able to reach before, but you can now reach if you have gone online. And these are some of the things we don't think about. And your competition, believe it or not, has now become more fierce. Because before, for example, location, location, location is what everybody said would determine if you had a good customer base or not. If you were sitting in a mall or you were on a busy street, that will determine whether a restaurant makes money or not. But now we're all ordering on an online platform. So I now have the preference of 50 versus 5 that was on the street before. So you now have to think about, how do I differentiate myself when the competition, believe it or not, has flattened? And this is at all industries, whether you're a bank, before think about it. If you were a bank, it's where am I going to put branches? How am I going to reach the people out there? Now, somebody with an online platform could reach the same amount of people as you can. So the whole segments of the market and the competition has changed significantly. So really and truly, for you to be able to compete and for you to be able to be resilient, you now have to say, how am I going to differentiate? And I need to understand what are the customer preferences and demands in this environment. So people are going to be working from home. They may not be working in offices. How does that change how I segment the market, how I target that market, how I deliver my goods, when I deliver my goods? So it's a lot of things to think about. When you think about your cash flows and releasing cash, everybody is, thinking, oh God, how am I just going to survive? How am I going to pay my debts? Again, looking back at your financial structure, do I have the right financing now for this new reimagined world? Are my cash flows going to flow the same time? And I challenge the bankers all the time. The way you do credit also has to change. Because let's think about it. If we really stick with this work from home, at least 50% of our people, our real estate footprint is going to change. If our real estate footprint is going to change, then the collateral that banks love so much is also not going to be the same. Technology might be your collateral. Technology might be your strength. Your customer experience might be your strength. So how am I going to borrow on service? And this kind of segues into how can we finance this reinvention differently? And, we quarrel a lot about government is not doing enough. There isn't enough to help entrepreneurs, but I can tell you, from doing actually a number of these panels, there are many grants that are available. During COVID, I remember doing an exercise and they're saying, well, we need this incentive and we need that incentive. But a lot of these incentives actually existed. So therefore, what we're doing now is saying, how can we do this differently? How can we finance it differently? And here comes in the good option of the junior stock exchange. So it's existed. It has been around a very long time. I am sad to say I probably did a million breakfast meetings with businesses trying to get them on the stock exchange over the last 20 years. And for some reason, we haven't taken it up. So government has said further, okay, there was a 10% tax credit, a tax holiday. We're going to change that now to 0. So here we have the benefit where the government is saying, if you put your business on the stock exchange, if you raise capital, thereby really improving our capital markets, then I am going to give you the benefit of 0 tax. So no fancy tax planning, no trying to change how I have my goods. We're saying you come on the stock exchange and you have a 0 tax rate for 5 years. Now I can tell you in Jamaica, who now has about 40 plus companies in the junior stock exchange. I'm not saying this will happen, so don't quote me 5 years from now, but they actually extended their tax holiday because they saw how much benefit people were getting from it. So right now we have 2 companies on it. We have Endeavor Holdings and we have Cinema One. Cinema One, if I remember correctly, were going out for $30 million. I think they actually got 20 something in the end. So to make this work, there's 2 sides of the story. We have to get the companies to be strong and fearless enough to go onto the stock exchange, and we have to get investors to trust that this is going to be a good story, a good investment, a good return. Now, I don't know how many of you all have your money in the bank, but every time I check, I earn 0% interest. So this is really 2 sides of the coin. If we get people to go on the junior stock exchange, what it does is the same reinventing that we're talking about. You can now finance it with patient money. You can invest in your technology. You can ramp up. We talk about export, and I keep asking people, if we were to open those export doors, how many of our manufacturers can ship out 10 containers of their product if it were to do successful? Do we have the equipment to really ramp up and do that in a large way? How are we going to get our quality up to par? How are we going to get our packaging to compete in a global world? So the junior stock exchange is giving you the ability to get that financing without the stress of debt. And we talked about the wave. We don't know when this wave is going to continue, on how long. So when it goes down, it's not a debt repayment I have to make. I can focus on reinvesting in my business, because what an investor is looking for is growth. When you go on a stock exchange, investors are valuing your business based on growth. So let's talk a little bit about the mechanics of this and the criteria for listing. Minimum issued share capital before listing, 5 million. And what I will also tell you guys is, don't focus on everything. So example, if you wanted to be a startup, we can have discussions with the SEC. We have had these discussions before where things can be waived. In Jamaica, there are a number of startups that actually went on the junior stock exchange, right? It means you make your case to the SEC and we go for waivers where we need to get waivers. They may or may not approve it based on the business case and the story and the amount of disclosure you have to your investors. The maximum issued share capital after listing is $50 million. So that means that you can really go on the junior stock exchange and raise a sizable sum that could take you where you want to go in this whole reinvention. A $20 million capital raise could pay for your technology, could get the equipment you need to ramp up. And what an investor is looking for is, what kind of story do you have? Where's the growth going to come from? And if you can convince an investor that this can happen, then there will be returns to them. So the public distribution. And let me just talk about public distribution from two perspectives. The listed company must have a minimum of 25 shareholders holding at least 30% of the new shares issued by the company. Now, this is a regulation, but I want you to think of it outside of the regulations. How does a stock market really work? How does your price continue to increase? For your price to continue to increase, or the value of your shares to accrete over time, you have to have people that are buying and people who are selling. Your best way of getting more trades is to have more people owning your shares. What you don't want is five institutions or corporates holding your shares and holding on it for their life because they don't have any other investment opportunities. What you want is a number of individuals holding these shares, looking at it in a real portfolio management. And the only way we will get that is we have to have enough people come in on the exchange all the time. So people are changing shares. People are looking at your growth story. People are deciding, should I sell now? Should I buy now? And what that does is get the market transactions going. And that is really what drives a stock exchange. It's the number of trades. People talk about our illiquid stock market, but one of the reasons it's illiquid, it's not so much of a demand issue, it's also a supply issue. Because we don't have enough investment opportunities, people buy and hold, which then means the stock prices don't move what we will call with an efficient market. So when we talk about the public distribution, this is actually not a very onerous requirement, and it is to your benefit to have more people holding your shares so that they would trade it. So when you really think about it, this is a great way for you to raise capital. What does it mean? Everybody is always worried about, well, what does this mean? Does this mean that I'm going to have to report every single thing? The reporting requirements, if you're running your business right, are not going to be a headache for you. They're actually things that you should be doing anyway. You should have your financial statements ready by the end of the month. You should have your business with a proper board of directors and independent boards. These are the kind of requirements. And in fact, in Jamaica, which I think they are lobbying going on right now to do the same in Trinidad, is to have an independent advisor on your board, which helps the business, cope with, be professional, also raises the trust and the transparency to the investors. I got you. So the benefits, and I'm not going to go in, I said most of this already. So let me just focus on the things that I know everybody is interested on. Valuation of my business, right? So Gina would have said in the beginning, all the gamut of things I do, but valuations, I would say, is the core of what I do. That is the foundation. Every year we will have a valuation. An evaluation between a private company and a traded company is very different. The discount from one to the other could be as high as 50%, depending on the industry, depending on the company, depending on the number of competitors. You also have someone else that's saying, here's your worth. That in itself is a currency, and that is a currency from a number of different perspectives. It's a currency of what employees am I going to attract? It's a currency of, if I want to go global, how is a global player going to look at my business? It's looked upon very different if you say you're a publicly traded company versus a family business. So this has so many benefits. And let me talk one more thing about this. So notice I'm not focusing on the tax incentives. I'm not focusing on the fact that you're going to pay zero tax for the 5 years. What I'm focusing on is just the natural reasons you should be thinking about it. Because when you do something like this, it shouldn't just be about the tax. It should be about, I am doing this because it's the best thing for my business. When you think about succession planning and the family businesses we have across the country, there's a lot of issues with succession planning. The second generation, the third generation don't want to come into the business. So the founders, how are they going to monetize all that they have built up over these years? The stock exchange is your best exit strategy. Your stock exchange will also bring in that professional management. So if you want to stay as a shareholder and a founder, you're just taking the dividends and you know your business is being run properly. So the benefits are numerous. The tax is just an added bonus. So, we need to be brave. We need to reinvent, and we need to find ways to raise capital that is outside of debt, which gives you patient capital. And I'm just going to add here from one other perspective. A lot of people talk about private equity, angel investing, etc. Why hasn't that happened here? One of the reasons is a private equity investor wants an exit strategy. They are coming in your business for 5 years, get their returns and leave, most of them, right? Depending on their strategy. When you have the junior stock exchange, there again, you have an exit strategy if you want to start with private equity first, and in 5 years, go go on the junior stock exchange so you can buy them out. So the point being is we have this incentive. There's no reason, there's no excuse. I am tired of hearing entrepreneurs saying, I cannot raise capital, I cannot get financing. Well, here's the solution. And it's really up to everyone now to be serious about, do I want to reinvent? Do I want to reshape? And do I want to be different? So I am going to hand over now. Oh, we have one more? Okay. IPO and life after, sorry. So the pre-planning, let me talk a little bit about that. So I would say one of the pieces of work that takes time is getting yourself ready. And a big part of that is, do I have, first of all, a good strategy? Because remember, what an investor is investing in is what is your strategy? Where is your growth going to come from? So you really have to think through what is going to be my growth strategy. And this is a marketing strategy as well. So before you plan your IPO, you have to think through 2 years before that, selling your story, so that people would be looking out for your IPO. People will already understand this business is going places. I understand where they're going. And luckily for social media, you can do this very cost effectively now. You can reach 50,000 people with the right posts, with the right messaging. And then the other thing you have to think about is my financial reporting. Putting my accounts in order. That is really important because you do have to have audited financials, unless of course you're a startup, then we'll have to go for a waiver, but you have to have audited financials. Again, this is something you should have if you are running your business in the right way to begin with. But the real value comes from the story. How am I going to tell these people when they put this money in, what am I going to do with it? How is this going to translate into wealth for them? What are the new markets we're going to target? And it cannot be airy-fairy. You have to think about, by the time you're ready to tell that story, you have established, here's the markets where I could be a differentiator. A pet peeve of mine is pepper sauce. I think pepper sauce is where we need to go with the exports. If we got all our pepper sauce companies to get together and form a nice co-op company, and we go on the stock exchange and we get, the agriculture side so that we could supply the peppers, we get the equipment, we get lovely little peppers that we could brand it in, and we start to export that. Again, it's about where's the growth going to come from. You have to get a prospectus. You have to tell the story. Believe it or not, in the prospectus, you don't actually need to put financial projections. A lot of people think, oh, I'm going to say I'm going to make this and I have to. You do not have to do that. What you have to tell is where is the growth going to come from. You have to tell the investor where the risk. And then the process starts where you have to go through the SEC and the TTMA. And they are really looking at your prospectus from an investor protection perspective. They want to understand where's the capital going. They want to ensure that you have rightly outlined where the risks are to the investor. As I often say, it's about buyer beware. So once you disclose, so if you say, I'm a startup, I'm going to invest in this technology, guess what? All I have is a prototype, but the market understands that they are walking into something that is more risky than an existing business. Then the SEC just has to ensure that your disclosure makes sure that people understand this risk. The investor roadshows. Again, I said this is very much a marketing strategy. You have to go out there. You have to get the population behind this issue. You have to get the population believing in your story, gaining your trust, understanding that you run your business with ethics, understanding that when you're saying that I've thought out this marketing strategy, you can execute it and you have the people to execute it. Again, so roadshow, excitement, we raise the capital, then what? And that's where it doesn't end. Because remember, what we're trying to do is to get our price to continuously increase. And this is another great benefit of being a public company, because you have somebody else to answer to. You have somebody else who's expecting you to grow your business. So it doesn't stop from the raising of the capital. You have to have active investor relations. This is what is going to make your company price increase. When the market is understanding what you're doing, because post IPO, you still want people to demand your shares, buy and sell. The more people demand, it's the higher the price is going to go. So your post IPO is really about managing your investor expectations. If you're going out there and saying we were going to do this in our first year and we can't, it's just about telling investors if we haven't delivered, why we haven't delivered. It's about always being transparent, letting people know who's sitting on your board, your corporate governance, your social responsibility. And I will tell you something a little bit about that. Young people want to ensure that they're investing in something that has a purpose. So again, here's another benefit. They want to see companies that have a social responsibility. So your post-IPO also has that driving factor to keep you going. It's like when you think of Amazon, right? Every month, Amazon has something new. They are continuously improving. And what does that do? Two things. Not only does it affect your price, but it means that your competitor can never catch up with you. So there's continuous improvement. And once you're successful with your IPO, this market is then available for you to continuously raise capital if you wanted to. Because your story has been told, people have made money. So when you need more capital, of course, you can raise equity, which then allows you to raise debt in a much more comfortable fashion because your debt and equity is a much stronger balance sheet. So that's the Junior Stock Exchange. That's our first incentive. I'm going to hand you over now to Anna, who's going to tell you about all the other incentives we have, which, you know, I was thinking about it. Some of them, if we marry them, both sides of the fence could get some tax benefits. Anna?
Hi, can you let me know if everybody's hearing me because we're handing over? Just a little nod in the chat room. Good morning, everybody, and it's truly a pleasure to present to you today. As you can see that Maria is extremely passionate about her topic. And I think that adding to that, I'm very passionate that the sustainable growth in this country is going to come from the SMEs, entrepreneurs, and the manufacturers. That's a firm belief of mine. And in doing my part, I think it's important that everybody is aware of the tax incentives and benefits that are going to be or planning to be introduced or announced in the last budget, but are also currently on the books. I believe that, as Maria correctly says, you're going to have a situation where it's going to be fluctuating over time with COVID. You're going to have a situation where your cost and your revenue are going to be under pressure. So it is very important in this type of environment, and even before this environment, that any dollar you go to spend, the first question you ask yourself is there a tax benefit from this spend that I can avail myself of to make this financially more attractive to me? So in keeping with the whole digitalization and the way that COVID has driven the global economy to do things very differently in a short time frame, the government is proposing to introduce some measures in tandem with the way the global economy is going, for want of a better word, right? So the first one they kind of spoke about was technology transformation. And they said, okay, we are going to give you a 150% allowance on money spent by businesses which invest in tech startups and new tech businesses. So when I look at this allowance, that means for every dollar I spend, I get to write off $1.50. That's basically what it means. And I love allowances that have an uplift. I find allowance where I spend $1 and get back $1 in deductions, right, does not attract me, but this one does. But again, this was only a proposal in the budget statement, because when I look at the wording, even on this slide that was lifted ready from the budget speech, businesses which invest in a tech startups. What does that mean? Who determines who is a tech startup? Who determines who is a tech business? How can I avail myself and ensure that I qualify for this 150% uplift? So when the finance bill comes in is when we're really going to understand how am I, if I'm interested in this investment scheme, let's say, I want to put a $3 million or $4 million into what I consider a new tech business, buy some shares and have, it has the right profile for me, my right risk profile. There's no concept right now, or there's no framework for how this is going to be implemented in practice. Okay, so the finance bill is going to have to guide us, right? They said businesses, and then it says you get an allowance for businesses which engage in technological solutions and digitalization. Again, how is that going to work? If I decide that I want to transform my production line and go digital or implement more advanced technology, who then decides what qualifies for this allowances uplift and who doesn't? So I think right now it sounds like a great idea. I welcome the initiative, but it definitely means that we need to wait to understand what really qualifies for this allowance, right? And the third one was businesses which create employment in the technological industry for young people. Again, what does that mean? Are you giving me the allowance on the salaries I pay to them? Are you saying I have to hire 50 more people? So it's a little bit vague at present. The spirit is there, but we will definitely have to see how this is implemented over time by the finance bill. We have to analyze that finance bill when it comes out. And the overriding principle here is that it's capped at 3 million. Okay, so the allowance, including the uplift, is capped at 3 million. All right, so that's the maximum you could get for a year that you take advantage of these tax incentives. Next page. This approved property development company regime has been around for a while, but it started way back, I think in 1966, and then in 2006 it was repealed. It was reintroduced in 2007. But when it was reintroduced in 2007, it came with timeline. So it said buildings constructed between this time and completed before this time. And then there was another amendment where it says, I think, buildings constructed and finished before the 31st of December 2014. So for a long time it was on the books, but of course it was not valid, for want of a better word, because they had a cutoff period for when the building had to be completed by. So what it seems to suggest is that they are looking to move that cutoff period, and the building has to be completed before the 31st of December 2024. Right now, the legislation says it's 31st December 2014. And what it proposes that you will get a write-off of 20% of the capital expenditure, including your regular tax allowances, your wear and tear, if you fall within the ambit of this section. Okay, so if you are a company, you construct a building, a commercial industrial building, right? You will get this incentive. You have to apply for approval. You have to apply to be deemed an approved property development company. Okay, now, as I said, it had not been triggered in many years because the last cutoff date was the 31st December 2014. So we now have to go back through the process to say, okay, how do I qualify to be an approved property development company? There are some requirements contained in the Income Tax Act right now, and I believe there's a share capital cap. It has to be owned by nationals of Trinidad and Tobago, citizens of Trinidad and Tobago. There are a couple things, criteria you have to tick the box, and then you have to make the application to be deemed an approved property development company. So in keeping with that, in keeping with trying to stimulate the construction sector as well, they have also said there will be removal of VAT on the importation of some building materials used exclusively in connection with approved building projects. And again, that concept of approved building projects. What is an approved building project? Who approves the building project and says, okay, the construction of this is an approved building project, therefore the import of this material should be VAT-free. So again, there's a lot of clarity that's needed around some of these incentives that they are seeking to introduce. And I'm sure that the finance bill will give us more clarity as to how this is going to work when it's rolled out. Okay. It will be remiss of me not to mention the other allowances that are really under and embedded and enshrined in the Income Tax and Corporation Tax Act, right? So we're talking about export. The whole of the country is saying, oh, we need to export more, we need to export more, find new markets. So one of the incentives is the promotional allowance, which I'm sure a lot of you will be familiar with. The promotional allowance traditionally has been for advertising spend and trade samples, and there are various things that qualify. The Income Tax Act has the types of expenditure that clearly qualifies for companies that export ex-CARICOM. Now, in the 2020 budget speech last year, they changed the legislation to say that you can get the 150% uplift on qualifying expenditure for the first time export to CARICOM markets. So I assume, because again, the language is there, but it's of course subject to interpretation, I would assume that if you were producing widgets and you are already exporting to Barbados, you could not get the promotional expense uplift for expenditure incurred in that jurisdiction on widgets. However, if you changed and you said, okay, I'm going to start shipping masks to Barbados, right? And you have expenditure that qualifies for the promotional expense uplift, then you should be able to get it on a new product shipped in commercial quantities for the first time. And that's another question. Again, vague, it's very, very vague. So it says the first time shipment. So is it all my expenditure I incur on promoting this new product in Barbados up to the date of export of the container in commercial quantities? It's these kind of little subtleties that you have to be careful of. I mean, I assume that was the intention, right? I think that is the most favorable way of looking at the legislation and interpreting it. As you know, we also have a trading allowance, as Maria has alluded to, in this new post-COVID, COVID world, I should say. There is going to be a lot of retraining that's going to have to be done because your delivery of goods is being done in a whole different environment. Your client, your customer service interface has taken a whole new turn and a whole new realm. So people need to be trained on how to keep close and provide excellent customer service in this new environment. Right, so the training allowance again is 150% uplift. So every dollar you spend, you get a deduction for $1.50. But the training allowance is only for training your employees. So example, if you have independent contractors or you have somebody who's a consultant, they're not your employee and you pay to train them, you cannot get the uplift on that. It's very clear. Yeah, it's very clear. The retraining and training of your employees. Okay. Now you know about your renewable energies, the CNC kits for the motor vehicles, etc. And then we already have our accelerated tax allowances for the manufacturers, the 90% initial allowance. What I would say here is this is not, yes, it's an incentive, but it's more deferral because you would have gotten the 100% write-off of the cost of plant and machinery used in your trade in any event. So this is just like acceleration of the allowance, right? To shelter you in the first couple of years with that 90%. And in the later years, of course, you know your written down value will be lower. So it all kind of evens itself out. I'm taking the opportunity to remind you that any budget presentation, the minister had, Honorable Minister Corin Embed also said he'd be raising the wear and tear allowance on Class B assets from 25% to 30%. So that's something else you need to take into account in FY21. Okay. Now these are also, again, I mean, as I said to you, I like incentives where I am getting an uplift. I spend $1, again, to claim $1.50. It doesn't mean to say that scholarships, you know, these scholarships and that types of sponsorship cannot be used in a very great marketing tool for your company, right? Now, there are a lot of restrictions around this scholarship sponsorship. So there are a lot of people who won't qualify, namely your employees, churn of employees, directors. I mean, it's a whole set has been carved out. It's really a true scholarship to, I would say, non-related parties of employees, for one of a better word, and directors. Okay, I won't spend too much time on the audio, visual, etc., etc. Those are fairly straightforward. And of course, we all know about the deeds of covenant, right? Which again is enshrined in the law and has been there for some time. I mean, I think what I'm trying to say is when you look at your company, you need to, the first thing you need to do when you're thinking of a new investment, besides the financing, following on from that has to be your tax. And I'll tell you, I deal with a lot of inbound investment into Trinidad and Tobago. And as soon as the financial modeling is done, the tax team is the next people on the phone. What is this going to cost me? Right? What is the tax? What is the tax regime in Trinidad? Are there any incentives available for this type of industry? So I get questionnaires that all feed in to the financial model, right? So that when they're looking to pull the trigger on investment, they are very clear upfront what the financial cost is going to be from both tax, financing, everything is already enshrined in that model. Okay. The next slide. Yeah, I could go to the next one. Right. This one I put in because I find these incentives extremely attractive. And I also find them, a lot of people don't ask about them a lot. You'll be surprised. So for example, if I had, I wanted to go vertically integrate my company and say, you know what, I need to get farming. I want to start securing my supply chain. And let's say I make and fly plantain chips. Let's just say plantain chips, right? Then I would be asking myself, okay, how would I secure my supply chain? And if I want to all of a sudden grow plantain, and please, I know that agriculture is not an easy sector. What incentive is there for me? And there actually is for 10 years, right? A total exemption from tax on the gains or profits from commercial farming. Now, to me, that would make me think twice. That would make it very, very interesting. And if we're talking about the people with the pepper sauce, are they even enjoying these incentives? Where are the peppers coming from? Are the peppers locally grown? Is this something that they should be looking into? Right? Should I look at this incentive? How do I structure my company? Do I form a new entity and get the approval as a commercial farmer to get that 10-year incentives? I have people calling me about cocoa. Apparently, we have some of the best cocoa in the world, right? So there are other incentives enshrined in the Income Tax and Corporation Tax Act that we must keep abreast of. It could be that Maria was speaking just now. Do I want to go into construction? If I have 5 million sitting down in the bank or 10 million sitting down in the bank, am I thinking of a construction project? Do I want to build housing maybe outside of Port of Spain, which is already congested? Are there incentives for that? So this slide goes through all the incentives that they have for construction besides the approved property development company that you can go through and you can apply for, right? We have a team here that does this. They work very well with the Ministry of Housing and Development. And the application process is not, it is, I wouldn't say it's onerous. I would say that, yeah, you have to get a lot of information, the approvals, the lots, or what it's going to be look like at the end of construction. But if you look at these incentives, and I'm saying I'm going to build, you know, newly constructed houses, maybe for less than 1.5 million is the construction cost, exclusive of the value of the land. Can I get this incentive? Right now, I know 1.5 million is low, right? Especially in any current market, but there are people who are effectively doing this, right? And then the question you're saying to yourself is, okay, the stamp duty has just been also changed. The proposal under the last budget was to raise the exemption on stamp duty. So all of a sudden, these types of properties could be more attractive. I believe, and please don't quote me, it's the first 2 million, I think, I may be wrong, but the exemption level on stamp duty it is proposed to be raised. So when you add that in with these incentives, it's also an area you could potentially focus on, right? And then, of course, it's newly constructed buildings and multi-story car parks and that kind of stuff. They're all incentives for that. The only incentive, I'll be honest, that is giving a bit of trouble, and I won't really say it's trouble. I will say that it's just a matter of clarification. There is an incentive under Section 45E of the Income Tax Act, similar total tax exemptions on gains or profits from the sale of multi-family dwellings. And to date, we have been trying to work with the ministry to get a definition of multi-family dwellings, because the cost cap of 1.5 million, right, that's contained under a different section, which is 42C, there's no cap for the multi-family dwellings on the cost of construction, right? So that is really where we are trying to work now with the ministry to get to a definition of multi-family dwelling. What does it mean, right? So that we can roll that out from a construction perspective, okay? So the next exciting thing that's happening in the Republic of Trinidad and Tobago, or should be happening, is the Special Economic Zone. The Special Economic Zone is intended to replace the free zones. There will be a period of transition, between the free zone companies and the Special Economic Zone. So it's really looking to diversify the reach of the free zone. The free zone, according to the EU and OECD, ring-fenced too much of our regime, our tax regime, and that ran foul of some of their rules. So it's a whole new dynamic regime that is going to look at a great range of diversification for companies, etc. And it doesn't only have, from what I understand, an export. It's not solely export, right? So I believe, and I want to just put a caveat here, I have not seen the legislation. I understand it's in draft. So what I'm on these slides is just our high level understanding of the legislation, okay? So if you go to the next slide. Right, so right now, this is where we're at. The legislation has been drafted, okay? And when it's passed, it will repeal the current free zones regime. companies that are under the current free zone regime will be grandfathered until the 30th of June 2021, which actually is not a lot of time, to be honest. And then they will have to apply, will be required to apply to be considered a SEC enterprise once they fulfill the criteria. So I guess the question, a lot of people who currently enjoy free zone status, they need to keep an eye on this, and they need to ensure that they begin the transition once the legislation is put in place. They begin the transition, or they reach out to their tax advisors to begin the transition from your free zone into your special economic zone. Okay, that's something you need to keep in your mind. So there are various enterprises that they're targeting. These are just a few, right? So you see again your software design and application, international trade, financial services. So they're looking to have a bigger sweep of the types of industries that they would like to include under this special economic zone. Okay, so some of the incentives we understand, it's going to be, of course, a preferential rate of corporation tax, tax allowances and credits for reinvestment, VAT exemption, customs duty exemptions, and of course, property tax exemptions. This is what we understand. What we are going to do is once the legislation has been enacted, we will be sending out a tax newsletter with more details on this new initiative, who can apply, who should apply, right? And it may be that when the legislation is actually passed, we may think of having another webinar on that particular thing, because it's huge. It is potentially, I would think this is a big game changer for Trinidad and Tobago, or could potentially be a game changer. I mean, the truth of the matter, if we want to export, we have to lower our cost of production. We have to be competitive on the international market. There's also transparency on pricing. Everybody can go on the net now and they say, okay, this product costs $10. If I say that's a retail price, add duty, add VAT, the maximum I pay is X. So right now, unfortunately, we have sometimes price takers, right? Because of all the information that's out there. There's a lot of transparency. So I believe any incentive that's going to ease you up on your tax outlay, because when you pay tax, or the money you have to pay over in tax, you can't reinvest in your company. You can't pay your shareholders. So tax is a financial cost and needs to be given the same attention as when you're going to negotiate in a bank. You need to sit down with your board and say, this is what we plan to do. What are the tax incentives? How do I get them? How is this going to change my financial modeling? If I get that 10-year tax exemption on my agricultural holdings, how is that going to look? How much money is that going to put back into the coffers to do other technological advancement and retooling? Because there could be a lot of retooling that's required to compete in a COVID world. And when I say compete, we had to compete before in globalization. I understand that. But COVID has made it more frontline. As you would see, big companies in the States, some of them are under a lot of pressure because their structures going into pre-COVID who are not strong. And they didn't have a balance sheet to survive a COVID. Okay. So I'd like to thank you very much. And I'm going to put myself on mute now for the Q&A section. And then when I'll just go back.
Actually, somebody wanted to talk about the audio visual. So I don't know if you could talk about that for 2 minutes. Oh, that's the 150 allowance.
Okay.
Is that different, Anna, to the tax credits you get if you're doing a local production?
Yeah, it involves local production. What I would do is I will send, hold on. Okay. Hi, are you here? Are you guys hearing me? Okay. I will send after this to the TTMA, the section that deals with the video and audio productions, right? Because it's very, very detailed in the legislation, what qualifies, what should qualify, what you need to do to get to secure the 150% uplift on that. Yeah.
Another question. Okay. Another question. Is it volume? Do I need to put my volume on? Are y'all hearing me? Yeah. Okay, great. One of the questions we had was actually share capital, and believe it or not, if your stated capital, it does not include your retained earnings, which gives you so much more room in terms of the quantum that you could raise, because not a lot of companies start with a very large stated capital. So it does not include your retained earnings, it's just your stated capital. Just wanted to add a few things that Anna said there. And when you really think about it and we put this all together of what this can do for the ecosystem of business, I get really excited. So, you know, when I think about what's going on in the rest of the world, our supply is being threatened, right? So where are we getting our goods from? Importing all the vegetables, the inputs to our products, that is being threatened by what's going on in the rest of the world. So when you really think about it, and when Anna was talking about this whole vertical integration and really looking at investing in the commercial farming, for example, and where that could go, and top that into the technology incentives. So all of us, you know, we think about technology and we think about the fact that a lot of solutions out there are not for small companies like ours. But if we could incentivize a technology company to come and set up shop here, to really provide solutions for our environment, again, the incentive is there for us to invest in that. So when you think about all these different parts, the training, the machinery, the farming, even the real estate, what we have here now, because let's just picture this. We have a farm. We put a multi-use, now I don't know if this will work, so I'll put my caveat there. We put a multi-use families. We put families who could live on the farms and could grow the product, secure it, etc. There is a huge potential here for us to deal with the issues of why agriculture has been a real problem. One of it is safety. One of it is, you know, getting people to want to work the lands. But if you're able to give them housing and a life, then look at what we can do there. And again, it's about securing your supply. So if we don't, I want people to think about all these incentives together. And again, it goes back to your business case. It starts with your strategy. What the government has done here and why we're focusing on all these incentives. When you think of the economic zones, if we put all this together, it really is the facilitation we need. And if we get them to change the ease of doing business with all of this, then we really have a recipe now for the private sector to come in and take advantage of all of this. We have the financing through the junior stock exchange. We have the incentives for the different industries. It's really up to us now to take this and make the economy out of this oil and gas and back to manufacturing where it should be. So I don't know what other questions we have. No more? Anna, you want to say any other closing remarks? Let me just see. Yeah, I think we've answered most of the questions. We will circulate the slides and stuff afterwards. So if you want the details, we will also circulate our contacts. So if anybody wants some further information or, you know, want to just bounce off some of the ideas that we spoke about, feel free to call us. Emailing is probably best. And let's take it from there. Yeah.
Hi, just to come back to the question on the audio and visual, right? So it's really under section 10K of the Corporation Tax Act, okay? And there's one for a production company where a production company incurs, but there's also one if a company that's not deemed a production company incurs expenses for making videos, I think of educational purposes and stuff like that. So I need to just go back into it a bit and I will email it to the TTMA and give you more information on that, but I want to mirror what Maria has said. I think that, you know, somebody said to me the other day, you could either look at COVID as a challenge, or you could let COVID just, you know, totally overwhelm you. And I believe there's a lot of opportunity that's in a strange way. I know it's not going to sound good, but we've been forced to do, and we needed to do for some time to get us off the reliance or the over reliance on the oil and gas sector. And I think this could work for us, and I think we're a country that we could do it. I just want to thank everybody for joining us, and we really appreciate it.
Okay, guys, I'm seeing one question popped up. Miss Mute, we're not hearing you. Hello, Miss Mute. Okay, that's the end of the webinar, everyone. Take care. Feel free to reach out to the TTMA if you have any questions concerning the presentation today, and we will liaise with the partners at EY and get back to you. You can email edbofficer@ttma.com. I'll put my email in the chat, and we will liaise with them on your behalf and get back to you.